Thursday, January 5th, market analysis. Stan Ehrlich, good morning. This is a fairly late recording today. I'm already at 49 California time. So I'll make it a little on the quicker side this morning. I always start out with the S&P 500. This is the SP. I've got the Eurodollar chart showing, so I got to change that real quick. And here we go. S&P 500. We continue now in the third week to have the sideways trading range. Now, yesterday we had a new high close for most of this trading range. It's the second highest close, but it wasn't above any particular previous important highs yesterday. And so there was no real breakout. It was just looked like, and that can fool you a lot of the time, too many assumptions. You know, they make an ass out of you and me. Assumptions are assuming. So we're down today. We didn't break out to the downside either. We continue to see the support at around 378, a little under 377.70, 80 area to hold. Today's low is slightly above that. We're currently coming up fairly good, but we're still down 2 1/3 points. I'd love to see this thing skyrocket today, create an outside up day, bullish engulfing, and close near its high above yesterday and the day before. That would be a great buy signal, but it hasn't happened. So you can never make the market do what you want it to do. You always have to move with it. So you wait. No breakouts, sideways trading range. My opinion is that it's supposed to, I think it's going to rally up to about 387.30-ish to challenge the high of this last 2.5 weeks of trading range at a minimum, which it almost did on Tuesday and then closed lower, unfortunately. But hey, at least it didn't break out to the downside so far. Now, the real resistance is up at around 392, 393. And there is a small gap to close, about a half a point's worth of a gap to close at around 395.5. So that area, 393 to 395.5, looks highly likely to be an area where the market could get to and be a good short sale. I'm still bearish. I have no reason to believe so far that we have finished any kind of a major bottom and are about to head north big time. But, ladies and gentlemen, I started talking about in December and maybe even in November that February, early February, presents a very good timing for the June low on June 17th and the October 13th, the famous now October 13th, October lows, which I called weeks in advance. And I got a fantastic Ehrlich reversal ER signal, green buy signal, smack dab on the bottom. And that's what the system is built for, picking the day that the market turns up or down. We had an excellent sell signal, but it wasn't the exact top of the rally way back here in April. And another excellent buy signal in January, which wasn't exactly the bottom. But we did have a sell signal, and this is going back a year, November 22 of 2021, which was almost the beginning of the bear market. I believe in the QQQ and the DIA, we did catch the high day on January 4th or 5th this year. Anyway, so in my opinion, we're going to go up to 393, 394, 395.5. Stop rallying at resistance, close an old gap from about 3 weeks ago, turn back down again into the balance of the month, and I think down to around 371, 370. Now, if that's true, and we are in late January or the first week or so of February, we might have a very large, very bullish, long-term investor type head and shoulder bottom formation. And at the end of the month, or the very beginning of February, which is my favorite week at the moment, timing wise, first week of February, the last shoulder low. You can't go down too much. It ruins the pattern. You can't do it too soon. You can't do it too late. So we're starting to get into the time period, which is a sweet spot. And that would be the last week or two of January or first week or two of February. And the price level should be, frankly, about where we're at, although a little lower would be a little better. Then I'll be screaming bloody murder that there could be a gigantic head and shoulder bottom forming, 3/4 of a year, and the beginning of a major long-term bull market that could very well make new historic highs. Frankly, probably. Let's go look at the DIA for a moment. All right. Essentially the same answers, comments, etc. But look at what's happened with the DIA. Since the October lows, which is a double bottom in this case, we have a huge rally that actually made new highs all the way going back to April. That's a much stronger rally than the spider. So we have the DIA leading the way up, and we'll look at the Qs in a moment. They're the least strength and the weakest, therefore. But the DIA has got the same sideways trading range in here, but it won't be a head and shoulder bottom. And if you want to call it that, you're going to have an upward slanted neckline from the high in August to the high made a month ago, December 13th. That's the two pivot points for the neckline, which would slant upwards slightly. Now, that's not necessarily bad. Head and shoulder bottoms do have upward slanted necklines sometimes. And the last shoulder is not necessarily all the way down to where the first shoulder was, which is in the ballpark of 300 and a little bit lower than 300, 290, 300 area. And we're at 330 right now. So it's not out of the question. It just won't be as good a looking formation as the spider. Now, lastly, the QQQ has been the weakest throughout this bear market. It tested the major bear trend line like the spider, and it stopped it. And now the sideways trading range for the last 2.5 weeks is very close to making new lows for the whole bear market duration, which is now slightly over 1 year. Yeah, it's almost exactly 1 year. And I mentioned before, yes, I did get a bearish engulfing ER sell signal on November 22nd for the QQQs, and that was the high of the bull market after COVID and the beginning of the bear market we are still in. But I think we're in the latter stages, the very end stages of this long-term bear market. So those are my comments on the stock market indexes. Let's go to the Santa Claus rally, which now today is finalized. You're supposed to buy a third 3 business days, trading days before Christmas, another third 2 trading days before Christmas, and the last third the first day before Christmas. And that would have been and was December 21, 22, and December 23. I believe that was a Wednesday, Thursday, and Friday. Yes. So the first trade has ended up being a loss. We got out on the first trading day of this year, which was Tuesday of this week, and it was a loss. I think it was in the neighborhood of 475, approximately 490, something like that. A little less than $500. Ouch. But the second entry was offset yesterday on a very strong up day and almost completely made up the difference between the first losing trade and the second trade, which was a nice profit. Nevertheless, it was still a net loss of a small amount. Today, we are out of our last Santa Claus rally trade, and this is 100% automated. We have exact specific time of day and date rules to do this. Last year, the trade made around $3,000+ a whopper of a great trade This year, we're up $92. Hardly worthwhile, but it was a profitable year, adding to the track record and the percentage, so it was profitable. And we're out of the last trade, which made enough money to compensate for a little bit of loss in the first two. And that's it, ladies and gentlemen. I may mention the Santa Claus rally in the next few recordings, but the trade is now entered and exited its 3 positions. Bye-bye, Santa Claus. Next, futures. Okay, I'm going to roll through the charts and make comments about them. We don't have any new, because today's been a pretty lackluster day. Signals, if I remember what I looked at a few minutes ago here. The E-mini, I'll start with the E-mini, is the same as the S&P 500 spider, of course, except the trading hours. Now, October 13th was still a bullish engulfing and a whopper of a buy signal. We had a couple of buy signals a little too early, but that's not uncommon with this trading system. They sometimes cluster a little bit before and after the best signal, which is hopefully at the bottom of the move, or the signals that are at the top of the move. Let's see if I do just a second here. Move to the left. And we have a couple of sell signals at the top of the spider, but we weren't able to come up with a bearish engulfing ER sell signal at the top of the previous bull market after COVID and the beginning of this bear market. All right, next chart is sugar. Got overbought, that's the yellow on a rally. If you see yellow on a break, it's oversold. That is not a signal, it's a warning. It's a warning that the market is probably about to turn in the opposite direction. So you see yellow at tops and bottoms frequently. Now, the special red or green bars are, of course, the completed ER buy or sell signal, and that's automated 100%. So no signal lately. We're coming down into support. We're getting close to being oversold. And I think sugar is about ready to turn back up again. The trend is definitely up. Next, corn. Hey, I screamed bloody murder at the end of last week, Friday, sell signal, bingo. The system would have gotten short at 676 or slightly higher, 678 as well. And it's been down almost every day since Tuesday, Wednesday, and today's Thursday. We are now slightly higher, a few ticks, but the low today is another new low. That sell signal was a very good one. We're down to 630 now, 650, excuse me, from short sales in the high 70s. Pretty good short in a 3-day period. I think we have a little bit more downside, but we're getting close to being oversold, not quite yet. Now, we also have a green buy signal that occurred on December 7th at the bottom of the break. Those are the ones you love. Next chart, that was corn. Next chart, bonds, futures. Bouncing a little bit, but, to be honest with you, I don't trust it. I'm still looking for a test of, say, 120, the low 120s, 121, 122. We've been down to about 24 a few days ago. I had a sell signal around, but not at the highest high, a few weeks ago. And we did get a sell signal back in August. It was the high of the whole damn rally. And we got a buy signal at the bottom in June. Those are excellent ones. Next chart's going to be 10-year notes. Same commentary in general. Both bonds and 10-year notes formed small head and shoulder bottoms that were a little bit sloppy. In fact, there's some similarity between this pattern that worked past tense back in September, October, in the 10-year notes and bonds to what we might be forming in a much, much larger formation in the interest rate indexes, stock indexes. We'll have to wait, of course, some weeks to see how that pans out. but I'll be talking about it every day because it's an extremely big formation and a very powerful major formation in the stock market index that might be building. I've seen thousands of head and shoulders, big and small, over my 52 years in this damn business. Okay, next chart. Gold. Got overbought yesterday. I mentioned that. So you're not supposed to be surprised if we turn down for a day. This trend has probably changed to up in the gold market. We did get a buy signal at the September 28th low. Turns out to be the low, first one, of what you could call a triple bottom. They're pretty rare. And the other two lows were slightly lower, but the closing prices were decent, above previous support levels, previous lows. And then it finally started to take off just after November 3rd. I'm friendly to gold. I think we're going to see higher levels. But for the moment, it's gotten a little tired, a little overbought, and I think a little bit more of a dip, maybe down to 1790-ish would be okay in the next few days. But I'd be looking for a buy signal. Next chart. Silver. Pretty much the same comments. Not a lot of difference here. Okay, next chart. Cocoa. We got a sell signal on top, and it's the high day so far. But yesterday and today, we've got a rally. I think this rally is probably finished, and I would expect it to turn back down and challenge the lows we've seen so far at 25.35 or even lower. But hey, since September, late September, in an oversold condition, this is now an uptrend. All of the bear trend lines are broken. There was a good run to the downside for several months. And now, since September, we're seeing higher highs and higher lows, the most basic definition of an uptrend. So I'm friendly to cocoa, looking for a place to be a buyer, but I'm looking for a slight bit of slippage here in the next few days, maybe a week or so. Next chart. Crude oil. Testing support, looking like it's turning around, but it's not oversold. The trend is down, thank goodness for that. And we did catch the top of the market with three, one of which was a high day, three bearish engulfing ER sell signals right smack at the top of the rally way back in June. All right. Bearish, looking for crude oil to make new lows soon, next few days. Next, live cattle. Got overbought, turned yellow the end of last week, Thursday and Friday. So we see it slipping back down slightly, not a lot, and testing support a couple of days ago, but it's just barely hitting support. It's possible that could be it, but I think there's a chance it might dip down to 155, mid 155 area before it starts to turn back up. But I'm friendly. The trend is up. We caught a great buy signal back in September 29th. All right. That was live cattle. Next, natural gas. New low for the trend. It's oversold. I probably said this yesterday and the day before. This is no place to be going short. I realize it's a new low and you're missing some profit if you wanted, past tense, to go short. But I think it's about to turn back up again very soon. This is Thursday. I wouldn't be surprised if tomorrow, Friday, there was profit taking and the market started to rally substantially. I would not go short here. I would be looking for buy signals. Next, high-grade copper. Neutral, not much to say, except we caught a great low back on September 28th. Next, platinum. Trend is up. I'm bullish on platinum, but it did get a little overbought, and so I'd expect to see a slight bit more of a downside correction. Today's the first decent down day since prices turned yellow, and not much to say here. I'd look for buy signals at around 1050 or 10 high 1040s, 1047, 48, 49, that kind of thing. Just a little lower. But I'm friendly. The trend is up, and the trend is your friend. Next, wheat. Again, we caught the top of the market after the beginning of the war on incredible series of limit up days in a row, many of them just screaming from about $900 to $1340-ish. Actually, 1408 looks like approximately. Yep, that's right. So a huge move up in wheat, and we got a bearish engulfing with my ER signals at the top, the high day. Again, 100% automated. There's no ifs, ands, or buts about it. You either believe it, trust it, and work with it, or you don't. And it's got a good track record. Now, next, live hogs at support, coming close to oversold, probably about to turn back up again. The trend is sideways, big long sideways, nothing. So it's bouncing between the high 70s and the mid 90s or low 90s. Neutral, not much to say. Next, coffee. We caught the bottom a couple months ago. You can see the green bar. By the way, we turned the candlesticks also the same colors, and it works with candlesticks. I just happen to be hooked on, vertical bar charts, which everybody used, and by hand, I might add, in the 1970s. It wasn't until the late 70s when the home computer, the Apple II Plus and the Apple IIe, started to be available, and software came out, CompuTrack, that people would use. I had two. I had one at home and I had one at work of Apple's, and I had CompuTrack on both of them. Tired of drawing my charts by hand. Next chart. OJ. Neutral. Not too much to say. It looks like it's trying to top out. Next. Bean oil. Caught the bottom. Great bullish engulfing, oversold conditions, and that was early December. Right now, don't really have a very strong opinion on soybean oil. Next, soybeans. I'm afraid I have to say the same thing for soybeans. Gigantic sideways trading range. When this sucker breaks out of this trading range for the last almost a year, it's going to have a very, very big move up or down. Next, we've got heating oil. Same kind of comment here. Now, I'm assuming because the bear trend is down in crude oil, that heating oil might very well do the same thing and break out to the downside, but that has not happened. I'm neutral at the moment. Period. Next chart. Soybean meal. Bullish. Obviously, it's made new highs for many months. Pulled back down to support, and then started to rally again until the end of last week. New highs. So I'm looking for higher levels on soybean meal. Next, and we're back to the E-mini. So let's go to Forex for a minute. I mentioned that new highs for the rally in the euro dollar and a lousy closing lower on the day is not a good sign. And that was my commentary on Tuesday of this week. And when it dropped like a rock and made new lows for a few weeks, the next day after making a higher high for the trend, a new high for the trend, that is not a good sign. So yesterday's rally went nowhere fast, and today we're seeing a slightly new low and a definite new low close, but this is not closed yet. So I'm bearish on the euro. I'd like to see it come back down to par, which is 1.00000000, maybe even lower. But I have to tell you, on a long-term basis, this could be building a bottom, but there's not enough of the parts to tell you what it's going to be. Let's look at the dollar index, which should be the exact opposite. Okay, new highs, good. It didn't make a lower low on Tuesday of this week, but we do have the rally where the euro is going down, the dollar is going up. And we had a bullish engulfing smack dab at the bottom of the market on the dollar index. and a bearish engulfing on the high, past tense, way back in September, a whopping great sell signal. And next would be dollar to the yen, USD, JPY. And we got the top of the market there, and we did get this week on Tuesday a bullish engulfing ER buy signal. It's green. We were up yesterday and we're up again today. So that signal so far is working very well. Anybody that got in using this system has a profit and probably a trailing stop that protects the profit, some of it. Remember, the inputs for the trading system are adjustable, so you can move your stop faster or slower. But there are other nuances, idiosyncrasies with our STS, Smart Trailing Stop, that you don't see. Next, and I don't want to make an advertisement out of this, Australian dollar to the US dollar. We got the bottom on the ER with a green bullish engulfing ER buy signal, and that was back in October. That's stalling out, losing some momentum in a broad area of resistance. Neutral for the moment, not too much to say. Canadian dollar, USD, CAD. Basically the same kind of comments, neutral but bullish long term. We did get a great sell signal at the top of this market and a green. Now these red and green bars are automatic. They turn red and green by themselves. That's the code that we wrote, which I've been working on for over a decade for the ER signals. Now, US to the Swiss franc, we have a buy signal that's a bit premature a few days ago, several days ago. It didn't turn out to be the lowest low. But again, I mentioned before that sometimes these are not the bottom day or high day. They're close. That still doesn't cut it for me. I like to see this, the bottom of a sharp break on September 13th, and a move straight back up. And that was after a sell signal at the high of a rally. Come on. And a crash straight back down to the low. There's some really good signals in this US dollar Swiss franc, but that doesn't guarantee or mean that there's going to be good signals in the months to come. Maybe, maybe not. Don't make those kinds of assumptions. US dollar Swiss franc. And lastly, the euro to the pound. Nothing happening today. A little bit of a rally, fairly good one. I'm neutral to friendly on the pound. And that is it, ladies and gentlemen. We're about to end tomorrow the first week of trading for the year 2023. Profitable trading to you. Thanks for tuning in. Sayonara.